Welcome to the first airing of the Bubbles Stock Market Show opening edition. It is Monday, October 13th, 2025, 8:27 a.m. Eastern Standard Time. If everything goes according to plan, there will be a opening show and a closing show Monday through Friday, or whatever days the stock market is open, generally Monday through Friday. Let's take a quick look through the general format that we're going to be using on the Bubble Stock Market Show. We're going to be acquainted with this charting window, which is labeled Markets Monthly. And we can also look at smaller time frames, but of the full market, not just the stock market, but all the financial markets, it's good to have a wide view of them. And while it could be argued that I'm missing some representation on this in this window, I think it's workable for my purposes and hopefully yours. Let me give you a quick tour of all the different instruments that we're looking at here. Each one, as you can see, as you will be able to see, is a 3-year chart. So from left to right, 3 years of time. And the red or green candle is 1 month of time. So follow my cursor here all the way to the left-hand side. We'll start in this top left-hand window. You see the DXY, that's representing the dollar. If you're not really familiar with it, don't worry about it too much. Just realize that this ticker symbol is going to represent the dollar for us. And as I mentioned, left to right, we got 3 years of information. Each red or green candle is 1 month of information. So overall, from left to right, the dollar is on a 3-year time period is down at the moment. Gold up, silver up, Bitcoin up, oil down. These four here represent the stock market in whole. And we see, what do we see? Up, 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 up. This one being kind of the weakest with a more dramatic pullback. Now, if you probably remember that last Friday must have been was that the 10th? Last Friday, the 10th, there was a down day, which was the opening week of this month on these candles. So we see this red candle here. So we know if we were to switch this over to right here to markets daily, now we're switching from a daily time frame to a monthly from left to right, and each candle, the red or green thing, is representing one day. So we're looking at a smaller picture. And look at on Friday, look at this big drop in the stock market. Big drop. Now, I know maybe if we measured this exactly, the length of this is closer to the length of this one than the length of this one. But this is still relative, especially if you put it together with this one. If you add these two together, it's roughly around the same size. So when we're dealing with stock market stuff, it's sometimes it is exact. Sometimes it is about an exact number, but oftentimes it's more about a range of numbers. It's sort of like a zip code area. So we see a similar picture here for all the indices of the stock market. And this one right here is the volatility of the stock market. And like usual, as we see a big dips in down in red in the stock market, we see a big spike up in green on the VIX. So these futures markets, they opened last night, and we see they gapped up about halfway into this big drop, and then the VIX gapped. I guess it opened here, but it's been slowly going down here. It got as low as 19, raised up to about 1958 at the moment. So we're watching to see is what's going to happen like this resistance area here. We see what happened. It got up here, it tested, it pulled back. So how long is it going to take to get back up into this area? The longer it takes to get back up into this area, the kind of weaker it's letting us know it is. The faster it takes to get up in this area and maybe make new highs, then the kind of the stronger it lets us know that it is. But we'll wait on a day by day basis. So other than that, like the dollar, on a monthly basis looks strong. Oil still looking weak. Gold, silver looking strong on a monthly, and Bitcoin looking weaker. So now we know we have a general way of looking at the big picture markets. You have an idea. Another thing you can do with these futures is they run longer. So like for example, I'm in the Eastern Standard Time. These open Sunday at 6 p.m. Eastern Standard Time. So you can already start paying attention to what's going on in the market and try to game plan for whatever time zone you live in or whatever you're doing. Okay, so let's quickly move on to next thing. We'll take a look at these this one FANG-D. All the Mag 7 stocks are scrunched up into here. And as you know, Apple and Amazon, they're sharing one box, whereas Nvidia, Netflix, Facebook, Meta, Google, they have the luxury of stretching out. They're one stock per box. Over here, they're scrunched up to two. Since there's only seven of them, and a stock can only go one of three ways, up, down, or sideways, we are going to open these up, and we're going to quickly go through all seven of these, quickly looking to find out up, down, or sideways, and then take an average of what we have. Now, technically, we could do it with it closed up like this, but I think it'll be more fun to do it this way. Up, down, or sideways? Up. Up, down, or sideways? Sideways. 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 Up, down, or sideways? Up. Now we're back to the beginning. So with a quick glance, not needing to be CNBC ready or anything like that, but with a quick glance through the big seven stocks of the stock market, we see that they're flattening out. Right? They're flattening out. And before this Friday drop in Nvidia, I was counting this as up. And then I went through this yesterday really quickly, and then I counted only two up and five sideways. And I was like, oh, it used to be three up and four sideways. But this big down day kind of brought Nvidia into a sideways range. Now it doesn't mean it's going to stay there. It could drop and it could go to a downward move. It could stay in a sideways move. It could go back into an upward move. It's going to stay in one of those. It's going to go one of those three ways. And it's sort of a combination of all of these giving us an idea of what is going on in the stock market. These, I don't, and you might be wondering why don't I have Tesla here? Because I trade Tesla quite a bit, so I have that somewhere else. I'm kind of monitoring these as bellwethers or indicators more than trading instruments. Although sometimes there might be some good trades setting up on these. Speaking of things that I'll trade a little more, right here I have my anything window. My anything window will generally always have the S&P 500 via the SPY here. We see that big down day. Got the VIX right under it. Between these two, then I see an influence on everything else. All these other stocks here are stocks that I love to trade. And some of them I will be sometimes demonstrating how I'm doing short strangles on these stocks. Like these two, I tend to do short strangles on every week, or at least now I tend to do short strangles on every week. Crowd, I'm working in there as well. These two are representing Bitcoin. You got IBIT, which is a lot better for the stock options or just trading directionally. And BTCI, although it has an option chain, it's not as robust of an option chain as IBIT. However, this is a dividend king. I shouldn't say a dividend king because these two are dividend kings. This is a dividend performer. It gives a high dividend. Hasn't been around nearly as long as either of these two dividend kings, so not sure how long it's going to go. So overall, it's more of a speculative, higher risk asset when you come on the yield side when you compare it to things like Coca-Cola or Mo. And speaking of Coca-Cola and Mo, we have those right here. These I like to really focus on these and BTCI and FCX and a couple others um, in more of a one share increment as I'm putting together something called I'm calling the one share gang to cater to people that just want to buy one share at a time due to financial restraints normally, or just kind of get their feet wet, something like that. So these stocks will go over more of those later at a later date, hopefully like a later today date, later today date. And then these two plus these four, I have been dialing in on a 1 hour chart. So all six of these I'm watching on a different, I have in a different window on a 1 day, 1 hour chart. And I'm doing a lot more day trading, short-term trading with these. And also these can really be good for one share trades as well. However, Palantir, Tesla, you're in the 400, almost 200, about almost a buck 50 right here, about a buck 50. Right here is probably the most reasonable one, 50, about 50 bucks. ASTS, a little bit below 100. So these can be used as a one share gang stocks as well, or you can get really good at pinpointing and timing directional option trades on these as well with some of these bigger price stocks, especially Tesla, really great option chain, but almost all of them do. The beta is really good. There's a lot of good stuff there. And in fact, I watch these anything on an hourly chart when the market's not open. So now I switched over exact anything, but after hours, before hours, extended hours, whatever the right term is. And the gray part, that's when the stock market's not open. So it's getting ready to open, and it's going to have a 6.5 little hour blurb of this black stuff here. And so what should you or can you be expecting to happen in the stock market today? Well, that is difficult for me to say because I don't know your specific situation, right? So we want to be really clear on one thing, that I'm not a financial advisor. The only person I'm giving financial advice to is myself. This is really just for educational and hopefully entertainment purposes. Hopefully you can learn more and go to whoever you need to go to that your professionals are before you make any decisions. Or if you become your own professional, hopefully this will kind of guide you along the way. So what should you expect? Well, let's go back to here, right here. Now, as I was saying, the market or an asset in the market can only move one of three ways. And it can't move two at the same time, up, down, or sideways. That's it. And so when you really get rooted into that and you're grounded in your base of understanding of directional picking is understanding that these are the three directions. That's it. And what the overall market is doing is going to have an impact on your individual stocks. However, sometimes what can happen is you can get something called relative strength or relative weakness, whereas the whole market is, let's say, going down, and you got something that's still going up, or it's like not dropping nearly as much. It's showing you some relative strength. There's times that you might look to go long, or that might be something you're looking to go long when the market corrects and it's going that upward direction, because then you have this rising tide raises all ships, lowering tide lowers all ships. But when you got one ship or some ships going down less than the other ones, it's giving you an idea of relative strength. What about relative weakness? What if you have the stock market going up, but you got other stocks not going up as strong with it, or going down when everything's going up? Then you're looking at relative weakness, and that can give you be some indications for different type of strategies where you're taking more of a short position, or you're somehow benefiting from the lack of movement up. So what should we be expecting today? One thing that we should be expecting is to just watch and see what's going to happen with this price movement. If you don't have any positions on, I think today is a great day to just to watch and decide and think and gather information. You don't have to be trading all the time. In fact, it's probably better if you trade 3 out of 5 days instead of 5 out of 5, or maybe 2 out of 5 days. If you start restricting your transactions, you possibly might find that you make better transactions. So we'll be watching for that. We see there's this resistance area that the futures are already bumping into. So we'll be watching that, and of course, to some degree, we're watching all these other assets. But it would be interesting if Bitcoin could drop down here to this low around this area again, and I would like to see what happens with the price of this, because this range of about $65 to about almost 55, 56 and a half, like this 56 and a half, closer to this 56 and a half, if you're looking to build a position in this, like I am actually building a position in this is going to be a better buying point right now. I mean, there's this risk, it's volatile, we don't know what's going to happen over the long term, la da da da. Who knows, exactly. So there's always some amount of risk in investing. And if you were to be really, really risk adverse and you want to stay away from like more speculative assets like anything Bitcoin related, and you wanted to go with Coca-Cola because you felt like that was the truest, there's even a certain amount of risk with that. There's always a risk with stuff. So that'll be interesting to see if these are going to keep pulling back. It looks like the moving averages are turning over. I'd like to see a drop below 60 would be great. I'll try to back up the truck a little bit on some BTCI below 60, but or not below 60, below 55, around 55. I was looking at the wrong ticker. Sometimes what I like to do with this one though is if I find a good way of selling options on this, I sell the options once the option is closed out and that trade is completely done. I might take that option premium, which is way better option chain on IBIT than BTCI, and I might take that money from IBIT and buy a share or more of BTCI. And if you look at the return on investment, if I were to take money and buy this asset, and this asset produces a monthly income, what's the return on that monthly income? Well, most people, the easiest way would be you'd go to the BTCI Neos Funds website, and you look at what's the ROI on BTCI. But that is a little bit misleading, because if I sold options and my option trade is done, so if I had $0 in my account and I sold an option for, let's say, $60, and 1 month later that option is completed, it is no longer open, it's completely closed, and I have $60 extra in my pocket, and then I take that $60 and I buy a share. Now my cost basis in a way, or my return on investment in a way, could be calculated like this: how much money did I originally put into this investment? Zero, because I took money out of the market. I took someone else's money, sold them a promise. The promise came to a conclusion. I took that money because I was there ready to give them the promise. I took that money, which was not mine, and I bought this investment with it. So I used money from the stock market to buy an income producing asset. And I think there is a way to look at that and say that that is a 100% return on investment. Now, will your CPA agree with that? I don't know. But you don't really need your CPA to agree with it for it still to be good financial investing sense. So let's see what the stock market has on our opening edition of Bubbles, the market show, the stock market show. Maybe I'll change the name. Maybe I'll end this series. Maybe I won't. Who knows? But at the moment, I'm going to give it a run and see if this can have fun for me and help some other people out. Okay, aloha.